Hi everyone, this is Paul Lange from Disciplined Trading Strategies, and I just wanted to introduce what you're about to watch. It's a 30-minute event that was presented live to the free members of Disciplined Trading Strategies. The topic is how to handle a bad day, and some of these answers may not be exactly what you think. Toward the end, when it sounds like I'm finishing, there are a couple of good questions at the end, so you may want to stick around for that. If you like this one, there are other past events and a lot of other great information at the free stuff page on disciplinedtradingstrategies.com. Enjoy the video. Good evening, everybody. Sound check. Can you hear me okay? We're on the clock tonight, so no niceties. This is a impromptu session. These come up a couple days ahead of time. Remember, our regular events are the first Wednesday of every month now. That's the regular DTS educational event that lasts for an hour and is always recorded and posted on the free stuff page. The platinum member sessions are always going to be the second Wednesday of the month, generally speaking. And then occasionally I do these impromptu, so this comes up a couple days ahead of time. I have a topic. It's too much to email. This is how to handle a bad day. So the impromptus they're going to be 30-minute events. I typically email an email summary. I may actually do a recording of this one, we'll see. And it's on a topic that comes up that, I just want to kind of get to, and it's a long topic for an email. This one actually is a topic that has been on the website. I never had an event about it per se, but I wanted to leave some time to get some input from you before I go through the whole thing. So this is how to handle a bad day, and this is the question we're going to deal with in just a second here. After a really bad day where you hit your max loss or maybe even went beyond your max loss as a day trader, what should you do the next day? Now, don't answer yet. I want to give some preliminary things first. This is really kind of as a day trader. You still have to follow this concept as a longer term trader, but it's a little less of a severe thing. You can get in real trouble day trading sometimes. So this is really a topic for a day trader. You can still apply it to longer term, but it's what do you do after a bad streak and for a day trader for a bad day, maybe 2 bad days? How do you go about handling it? So the question, after a really bad day, when you hit max loss, what do you do the next day? Well, here was me a week ago Friday. This was like 10 days, 2 weeks ago tomorrow. So not last week, but the Friday before last week. That was my trading record for that day. Like, wow, right? Not really a thing right, and really went one beyond where I should. That's a 5-hour loss, kind of like to 3 and then maybe come back for one more as a max. What about that terrible losing day? What do you do about a terrible losing day like that? You may not see in trading events like this, like you're at right now, you may not see something like that very often, because normally you just see all the great trades and everybody talking about how easy it is. But the truth of it is, trading is about making money, which is about how to handle the good trades as well as the bad trades. You've heard me say that a lot. It's how you handle the trades. It's not that hard to learn to find good patterns. It takes some time. But then a lot of traders blow it because they don't know what to do with good trades. That's really the bigger problem most of the time. And they don't know what to do with bad trades. But it's also a matter of how do you handle the good days as well as the bad days. So let's stop on this slide here for a minute. I'm going to park here for about 5 minutes or so. After a really bad day where you hit your max loss or maybe went beyond your max loss, what should you do the next day? Just freelance some answers for me. What do you think? I'm going to sit here till I get a bunch of answers. What do you think the proper answer is? Paper trade until you get your bearings. I'm not going to comment on anything until I get a whole bunch of them. Take a day off and don't trade. Fresh start. What does that mean? I don't know what fresh start means. Same thing you did today. Try and lose a lot of money. Review your trading plan. Maybe some specifics. What would you do when you review your trading plan? You're going to look at it and go, yep, that's my trading plan. Stop trading and review why you did bad trades and set new rules. Stick to your trading plan. Stick to your trading plan. Well, Steve, remember my trading plan, right? Okay, no comments. See if you followed your trading plan. Double down on your trades. Okay, Attaway wave. I make myself run drills in a simulator until I hit a daily target according to my day trading plan. Okay, so that's after one bad day. Losses are a normal part of trading. Bad way to start a weekend. Plan. Well, before we go any further, I'm still going to make you give me some answers. Is this an issue? Wait. Is there a difference whether you're a new trader or an experienced trader? New question. Is there a difference in how you handle this situation if you're a new trader or an experienced trader? Okay, we're all agreeing on that one. Well, let's assume there's a big difference, and let's divide it up then. Let's talk about experienced traders. See the big asterisk there? Can everybody see that? Let's talk about what an experienced trader should do, which is so I assume you're probably answering all that a minute ago. So since you gave me a whole bunch of answers, let me try and summarize your answers, and let's vote on which is best. Number one, there's 5 answers here, so wait till I get them all out there. Number one, take a quick look that evening to make sure you took trades you're supposed to take. Make a mental note if you didn't, and then trade the next day all out just like nothing happened. 2, do not trade the next day regardless of the results of any trade review. Spend the next day reviewing your trading plan. Number 3, return to trading the next day, but cut your risk in half and keep it there until you have regained the loss from the prior day. Number 4, review your trades. If you made any errors, do not trade, but if you did not make any errors, return to trading, but trade cautiously. I could put a little yellow flag there. And 5, just trade cautiously with half the risk for 3 days. Which of those do you think is the best answer, if you had to pick one of those? Oh, is this like follow the leader? Uh-oh, the 2s are gaining steam, and now we have a 4. This is one of these where I feel there is an absolute answer to it, like it's not a matter of opinion. I always try and distinguish between opinion and fact. You may think it's my opinion because you will hear many other opinions. You won't often hear people talk like me. You won't often see people show you the results of a bad day, right? How often do you see that? But I also give you answers because I know what the answers are because I've been doing this a long time, and a lot of people just give you fluff, like out of the alleged book for trading, which doesn't really exist, where people just give comments about things they don't know anything about. The correct answer to this one, without a doubt, without any question to me, is number 1. Take a quick look, make sure you didn't just fly off the wheels for some reason, and then you go back the next day like there was nothing wrong, and you just trade all out from the first trade and just pretend nothing ever happened because nothing did ever happen. Here's the reason why for that. It comes down to a little bit of math and probabilities, if you will. What do you think a good batting average is, or what do you strive for as a batting average? Just, I mean, there's different trading styles. There's no right or wrong answer. Just give me, what do you think an okay batting average is? Because if your Sharpe ratio is high, you could have a batting average of 30% and you'd be making money. I tend to kind of focus, okay, 55 to 65. Okay, I think that's really good. It depends what your Sharpe ratio is, of course, but I mean, a lot of traders end up, oh, is that what you do, Sammy? That's really good. I mean, that's huge. It depends what your wins are, but let's say on average, just for sake of argument, it won't matter. Let's say you bat 50% and your winners are 1.5 times your losers. So you're making good money, but you're batting 50% just for sake of argument, okay? And by the way, a batting average says nothing about how well you trade, right? You could bat 70% and lose money hand over fist, and you can bat 40% and make money hand over fist. It's all a matter of how the rest of your trade works out. Well, let's just say for fun, 50%, right? So here's a little stat for you. Well, let me ask you kind of. Batting, assuming that you batted 50%, what are the chances of getting 3 trades wrong in a row? In other words, flipping a coin heads 3 times. Well, let's say 4 in a row. If you got 4 trades wrong in a row, that would really devastate a lot of traders, right? I mean, that'd make you really, right? That would really make you sit down and go, whoa, and maybe go back. And some of you may suggest that go back to the drawing board, go back to your trading plan, don't trade for a few days, whatever it is. 4 trades in a row wrong. Well, what are the odds of getting 4 trades in a row wrong? What are the odds of flipping a coin heads 4 times in a row? Right? 1 in 16, exactly. 1 in 16, right? So if you take 8 trades a day, that's a lot more than I do. So in every 8 trading days, if you took 8 trades a day, every 8 trading days, you would have 4 losers in a row just by probabilities. So every week and a half to 2 weeks, you're going to have 4 losers in a row. All is part of a winning trading plan. So this is what I mean. You can't just overreact at the odds. The things happen. It happened to me that day. I can't say I did anything terrible. I look back and actually on that day, I didn't do anything terrible. I did something bad the next Monday, but I did nothing really wrong that day. It's just, hey, sometimes stuff doesn't work. And you could be fighting the odds because maybe you had the wrong market bias that day, and that affects your odds a little bit. And that's just one thing you did wrong. Maybe you got really in love with a certain setup that just wasn't working that day, and maybe you gave it 2 shots, and that's what hurt you. As a professional trader, as a good trader, when you've established yourself and you know what you're doing, you go right back to it, because here's what happens. For those of you that say, oh, just be safe and cautious and cut your risk in half, well, being cautious is not always the right answer. Because what happens is, let's say the next day you come back and you have a really good day. So you lost 5 hours that day. Let's say the next day you come back and you make 3 hours, but you cut your risk to 1/4, right? So now you've made back less than 1 hour, right? Anybody ever do that? Has anybody been through that pattern? Because it's a very common thing, where you kind of lose with big risk, and then you reduce your risk and you win, 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 right? And then you're not even back to even. Okay, now I'll increase the risk, and you start losing again, right? Because you're just, it's almost like you're betting on the wrong hands, almost on purpose. You know what I mean? So you don't do that. You don't vary the risk. That's always the wrong thing to do, unless you really have a problem. You know, I'm not saying, keep in mind, I'm not saying you never stop or do anything different. I'm just saying a bad day, maybe even 2 bad days in a row. You just don't stop everything in reverse procedure. Does that make sense, everybody? Because great traders will have bad days. Anybody want to argue with me on that? I mean, you're just going to. You have to. If you don't, you're not making money. It means you're not making money either, right? Without risk, there is no reward. You go out there with conviction, you do something, you're wrong, you pay the price one day. That's just what it is. So the winner is that. The reason I'm doing this, there's actually a video on the website, on the free stuff page. It says how to get out of a trading slump, and it goes over the same stuff. And actually, you can, as a good review to today, you can go view that if you want. Here's a link to it, as a matter of fact. But we still have to talk about the other half of this right here. This is right on the free stuff page. You can all access. And there it is. Don't read it now, but go to it and listen to it later. So the reason I brought this up as a demonstration, I've always had this video out there on how to handle this, but how about when I prove exactly what I'm talking about? So here's kind of me always trying to say I do what I say and I say what I do. And here it is. So this is the next week. The next week I came back, and actually, even after absorbing the bad day, still almost made my goal that week. So absorbed that Friday and did well enough to make it back, just because I did nothing different. And actually, what's funny was this is really a bad trade. This is an out-of-body trade. I don't think it had anything to do with the prior week. It just kind of shows I just went back to the plate and did what I'm supposed to do. I didn't like the stuff on Monday, Tuesday a lot. I struggled a little bit, and then boom, boom, Wednesday, Thursday, both really huge days. And then to top that off, also, just to kind of prove my point, have you ever noticed sometimes that maybe you were developing, or maybe you still do this, that maybe when you're trading, you start off the day, if you're day trading or even long term, and you have a losing trade and you're down one. You have another losing trade, you're down one, right? And then you get the winning trade, which maybe is going to be +3, but you get to about up 1.5 or so, and what do, everybody? What do people tend to do? If you have 2 losing trades in the bucket already, and then your third one's up 2 hours, right, you just close it off, because that little demon inside of us says, what? Break even, I'm happy, let's just start over. Somebody even said that, let's just start over again, right? Well, if you do this, think about it, you are following a plan where you are trying to break even, right? That's what you're trying to do. You're not even giving yourself any chance to win, because you're not going to have 8 winners in a row probably. So now you're going to lose one, and then the one that's supposed to win 3, you're going to cut it off again, and you're going to be sitting here forever like that. So every trade is worth what it's worth. Every day is worth what it's worth. So it's not like, that's why I never advocate stopping a good trading day. I mean, if you have the setups, you go and you take it for what it is. People in the room know there's some days I'm sitting there bored at open, right? There's some days I leave, right? Everybody in the room, I put a sign up, see you at 10. I don't know what to do. I'm bored to tears. All this work, all these charts, all my favorites, there's nothing here I like, right? And then the next day, I'm hitting the button so fast, I wish I had an assistant to help get in some other trades with me. It's just what's available. And we all like different things maybe, but if you're good at looking at and finding your favorite stuff, not every day is the same, despite what some people say. Not every day is the same. You're going to have your good days. You're going to have your days where things are tougher, and that's how you try and judge what you do. So every trade you take for what it's worth. If you have a trade that's going to make 3 hours, you take it to 3 hours. You don't cut it off because your last one was a loser and you want to get back to the break-even category. And it's the same thing with every day. So You may have thought, if I go back to that for a minute, somebody may have thought, hey, after Wednesday, I erased that day completely and then some, right? So just chill and be happy you made it. Well, the next day, IBM, super aggressive trade, right? Not a nerve-wracking trade. IBM I consider to be a novice gap. It gapped to there. See the silver line? And then it ran that high. So I kind of knew that open that was not going to fall. So I waited luckily because if I started too early, I may have been in trouble. And then here's the 5-minute chart for that day. So this is the big gap up. You're seeing the 5-minute chart now. Short one, you can read the numbers down here with the stop. A second trade on top of the first trade. This wasn't a stop. This was still in play. Added a second trade and then combined them all and took 2 targets and made 3 R's. So my point just being is that you have to kind of be at that level where you say, hey, I know what I'm doing. Something happened that one day, no big deal. Now, if you do run into a serious problem, you do have to react to it. I'm just saying that for one day, you don't stop everything and shut down. That's all. So warning, please understand exactly what is written here. No one's a bigger proponent of starting off small and gaining confidence in your trading. It's a must. And during that time, you must have a strict plan to follow. And even after you have proven a track record, you may need to regroup, cut back, or start over if you mess up. You just don't do it blindly because you have a couple losing days. You will have losing days, all right? Now keep in mind here, it says here, the average person reading this probably should do more than resume trading. You have to know where you are. So let's talk about that other person. We just talked about, I said, is there a difference between experienced and new trader? And you said, yeah, we just talked about experienced trader, and most of you seem to have the answer I like there. What about a new trader? Well, it's kind of semantics here, because one answer could be, well, here's the answers. Here's your choices. Follow your risk progression plan and do what it says. Let me pull that off the screen a minute. The answer to me, in a sense, is for both a new or experienced trader, you just keep doing what you were doing the prior day. Why? Because the experienced trader just had a bad day, and the new trader, what they were doing the prior day, if they're a new trader, is what? They're following a very tightly watched trading plan and risk progression plan, right? True, everybody? At least you should be. Agree. Every new trader out there is saying, hey, here's what I'm risking, and here are my rules. I need this many successful trades, and then I can move up my risk. And if I have this many bad trades, I have to move down my risk, right? So in essence, the real answer is both these traders do exactly what they did the day before. Now, obviously, the bad new trader is not going to lose that much money. They may lose that many R's, but what they were doing the day before was they were following the risk progression plan. And that will tell them, hey, you had a losing day, you have to move back the risk. You were at 50, now you go back to 25. Or maybe it'll say, hey, you know what, that's one day. If you do that again, you got to move back, otherwise whatever. The answer to both of these really is you don't do anything different. You don't overreact, because if you're new, you have a plan that incorporates this question. Does that make sense, everybody? It's kind of a trick question because most people don't do this, right? So you're picturing a new person getting in trouble. New person should never get in trouble. Where people get in trouble is in that little in-between area. You're a new person like this, and you're following, and you're doing good, and you're following your little risk progression, and then you get to some level, and then you say to yourself, okay, I'm really good now. And somewhere in between, maybe you have a hiccup, and now you're kind of unprotected because you're not really following that risk plan anymore. You're not really that good yet, and that's where people get in trouble, is that little void in between, hey, I'm following a tight plan, and hey, I'm really pretty good. So the multiple choice here is kind of just a fun question because it's not a real question. Follow your risk progression plan and do what it says, or do something really stupid, because those are really the only 2 choices between those 2, right? Questions. I'm a couple minutes ahead of schedule because you guys kind of hit that answer number 1 pretty well. I expected some more other answers or feedback on that. Any questions on this? This is a big topic. Remember, most traders don't make it. They don't get training, they don't know what they're doing, and they bomb out, for one of these various reasons. Here's a DTS trading tip. Follow all the DTS trading tips. For those of you that don't know, I've been doing podcasts. I'm on episode 25. Figure out where to find them, or email me, or I'll send an email around again to everybody pretty soon. Something I'm surprised at, a lot of people sign up for platinum, but I'm kind of like, surprised that everyone that ever sees this doesn't sign up for it. I mean, obviously, if you're a seminar program member, you already get this automatically, but there you can read about being a platinum person. Just read through that, the stuff you get, because you get the home study courses for the intro class for mastering options. The cost of it can be deducted from any future purchase of an annual subscription or this DTS seminar program, and then you get meetings every month, and you get backlogs of all the Trade of the Week videos and all the prior events, et cetera, et cetera. So it's good stuff. I think that's all I really got then. We're going to have, there's the platinum member stuff you get. All the archives, intro, group sessions, options course, blah, 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 all that stuff. And we're just finishing up the current seminar program. So this Sunday, so the next intro class is until March 1st. But remember, next Wednesday will be the official DTS event. I haven't picked the topic yet. I think I know what it is. And the next seminar program starts on March 2nd. There is a price increase in the seminar program. There's a couple emails about that somewhere in the middle of February. I forgot where it was. I'm sure you'll get an email about that. And I believe that's it. I'm 5 minutes early. We got to be done with these right at 5:30. So any questions, anybody? Anything you want to talk about? That's what these are. Quick little one-hit topics. Difference between market reaction to earnings. I don't understand the question. You mean a stock has bad earnings and it rallies type of thing? Is that what you mean, DSOP? Like stock has good earnings and it falls? That's the only thing I can figure out you're asking. Difference between... Well, DSOP, if you're asking that question, I mean, you really have to be careful because you don't understand how the market works at all. As a matter of fact, the intro class, have you ever been to one of my intro classes, the Introduction to Mastering Technical Analysis? Because we talk about that topic for a long time. You have, okay. Well, think about that. The earnings has nothing to do with where the stock's going to trade. You've probably heard the saying, buy the rumor, sell the news. And that's why you have to understand charts, because if it has good earnings, but the earnings have already been anticipated, if you will, and if every person who is ever going to own that stock already owns it, it can't possibly go up. It can only drop. That's what technical analysis is all about. The actual earnings, what they have to say, are very meaningless. Doesn't matter at all. Doesn't matter what's in there. I haven't read an earnings report ever in my entire life. I've never read an earnings report, nor would I ever care to, nor would I ever care to hear what the idiots on TV say about the earnings reports. What I care about is what the stock does in reaction to it. And that's what technical analysis is all about. So it's not surprising, it's almost the norm. If anybody out there is trying to make money by, listening to earnings, listening to the pundits, listening to economic reports, there's zero chance you make money. It's not just worthless, it actually will hurt you. It'll work against you to try and understand that stuff, because the market is, or any stock, is the greatest forecaster of future events. It's already built into an unknown quantity, anything in the future. So it makes it very difficult for you to listen to news and try and anticipate what that reaction to news is going to have. Well, you ought to be at the facilities, and you ought to be not even trading, because that's not the time to trade. I mean, it's foolish to sit there and try and trade listening to the reaction to idiots on TV. Learn how to be boring when you trade. Learn how to forget about all that garbage and all the talk and all the forget all that stuff, and just learn how to find stocks whose chart patterns can't help but tell you that they're going in one direction or the other. That's what you look for. You can't sit there and listen. I don't listen to that. I don't listen to the idiots talk. I wasn't even at the screen for FOMC yesterday. I wasn't anywhere around for it. I don't care to listen to them. I don't trade FOMC days, or at least I don't start trades in the afternoon. I only do in the morning. All right. 5:29, we got to cut it here. Thanks, everybody. We'll see you, if you're in the room, we'll see you in the morning. Otherwise, we'll see you next Wednesday for the DTS educational event. Have a great night.